Are interest rates going to come down in 2024? Watch this video and find out what we think about it. Thanks for hopping on the channel. I'm Logan Sadler here, the host of The Financial Beat, and also the Chief Investment Officer here at Rigeri Financial. So I wanted to talk to you guys about something I saw here in the news, like many of you did while I was recording this video. You probably saw some headlines as far as, the Fed has, basically paused interest rates, but they didn't really lower them like expected for many of you out there. Many of you might not have been shocked, but many of you might have been shocked. So one thing I've been talking with a lot of clients about what to expect this year in 2024. One thing I'm not in the business of is trying to throw out crazy accusations or read into the crystal ball, because unfortunately, I do not have a crystal ball. So one thing we like to really preach here to our clients, and I wanted to bring it here to the channel, is really making sure you understand the impact of what inflation and all that stuff means, but also really what the impact of of interest rates going up or down, and some of the effects that could have on a portfolio or an outcome. We've seen a lot of people waiting to buy homes, right? You're waiting for people to buy homes because they're hoping interest rates come down. You've seen a lot of bond, and interest rates as far as banking products, CDs, money markets. You've seen a lot of those tail off a little bit here the last few months as there's been talk of interest rates being lowered, maybe even some annuities and other products like that that are priced off interest rates. You've seen some fluctuation there as well, coming down on the downside. So I think it's very important when you're looking at, whether we should buy now or wait as far as real estate goes, or CDs or money markets or whatever tools you're using that can be affected by interest rates, understanding that, just because the government or whoever, the Fed, comes out and says that they are scheduling to potentially lower interest rates, that is something that could happen. However, if the guidelines aren't met like they want it to be, as you just saw, they won't do it, right? And so I think the very important part is not trying to play the timing of the market, right? Whether that's timing the bond market, timing the stock market. I've done a bunch of videos on here about how we just can't time the market, right? It's hard to know when the market's going to crash. It's hard to know when it's going to go up. It's even harder to know when it's going to do both of them at the same time, right? So same thing with the interest rate game. If you're looking at pricing in an annuity to be part of your portfolio and the rates are good and you like it and it's a good fit, look at doing that. If you're looking at buying a CD or a money market and you think it's going to be a good fit, look and see how that's going to fit into the plan. Or if you're looking at buying a home, making sure you can afford it, qualified and all that stuff, and making sure it's a good deal that you feel you're affordable with. And don't always plan on, well, I'll buy it now and refinance it next year, because who knows what rates could be, right? They could be higher or lower. Nobody truly knows the answer to that. We have some details and some metrics and some numbers we can look at, but there's no guarantee. So I think it's super important when we're looking at this year. There's a lot of factors that can play into this. When we're looking at inflation, is still not where a lot of people want it to be, especially as the Fed announced, especially as they see it. And then also when you're looking at a lot of the other factors as far as the presidential election coming up, potential wars, all these different outcomes that we don't know what can come up or out of anywhere, right? All these black swan events can happen. So I think it's very important to really stay in tune, work with an advisor, or if you do it yourself, like some of you may, some of you are very intelligent and keep up with a lot of it yourself too, and that's awesome. But I think it's super important to really look at some of the different metrics of the pros and cons of rates going up or down, and really trying to price that into your portfolio and making sure we're not making any type of assumptions one way or the other, and making sure you're being diversified and well-rounded. So again, anybody out there, want to make sure you're meeting with a qualified professional on your situation. And definitely, if you have some questions, you could email us or comment here on the channel. We'd be happy to get back to you. But we appreciate the support. Thanks for stopping by the channel. We'll be back here again next week with another video.